Be Wealthy and Smart, episode 1566.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how the wealthy are investing in AI. Now, I've been talking about AI for a couple years and how this is going to be a huge boom and eventually a bubble, very similar to the dot-com bubble with the Y2K bubble combined. I first did a podcast about that a couple years ago, so you can check that out if you like. But according to Citigroup, AI seems to be different from previous technological innovations, and Citi's 2024 Global Family Office Survey found that 80% of respondents indicated they have either invested in AI or want to. Family offices are accessing the sector through private and public markets, which enables them to invest into the full AI lifecycle and ecosystem. They believe there's no doubt that artificial intelligence will fundamentally change the way we work and live. Pervasiveness of the technology leads to broader themes that they are currently discussing with clients, such as energy, nuclear alternatives and fossil fuels, deep tech, fintech, education, and healthcare. According to CNBC, investment firms of the ultra-wealthy, such as the family office of Jeff Bezos, are making headlines with massive fundraisers for artificial intelligence startups. Late last month, Bezos Expeditions co-led a $405 million round for robotics startup Field AI with backers including Laurene Powell Jobs' Emerson Collective. In the past 6 months alone, Hillspire, the family office of Google billionaire Eric Schmidt, has backed at least 6 AI startups, per data provided exclusively to CNBC by Fintrix, a private wealth intelligence platform. But while tech unicorns get most of the buzz, family offices prefer to invest in the AI boom via public equities, according to a recent poll by Goldman Sachs. The bank's survey of 245 worldwide family offices found that 52% are exposed to AI through primary public equities, or ETFs, while only a quarter reported investing directly in AI startups. Goldman Sachs' Mina Flynn told Inside Wealth that family offices likely have even greater exposure through stocks than they realize. The top 9 out of 10 stocks in the S&P 500 are AI-driven stories, and they make up 40% of the S&P. Flynn partially attributed the preference for AI stocks to more tempered valuations in public markets. If you look over the last 5 years, and you look at the valuation discrepancies between private markets and public markets, the private markets really needed to grow into the valuations that some of the general partners entered into. She said, people, I think, have more confidence in the public markets from a valuation perspective. So, of course, when they are talking about the private markets, they're talking about pre-IPO companies, private businesses that have not yet had an IPO and are not trading on the stock market. When they talk about a public market company, of course, that means it's traded on a stock exchange and or packaged in an ETF, which are a basket of stocks that trade together and priced as if they were one stock. Family offices were also more likely to report investing in companies that leverage AI for productivity and efficiency, 38%, or secondary beneficiaries of the AI boom, such as energy providers, 32%, than AI startups. Respondents were allowed to pick multiple answers. The report noted that 27% of family offices anticipated being overweight to energy and materials firms in the public and private markets in the next 12 months. The respondents, 2/3 of which reported managing at least $1 billion in assets, were polled from May 20th to June 18th. Nearly 9 out of 10 reported some form of investment in AI. Only 5% indicated that they were not considering investing in the space. Family offices are not known for their tech savvy, with Deloitte estimating the average age of family office principals at 68 years old. But Goldman Sachs' Jean Altier says they have warmed quickly to AI as it's become ubiquitous in everyday life, unlike other new technologies like blockchain. She gave the example of Google's AI search function and said, "It's already a part of people's life. I do think people's native exposure to AI has happened a lot quicker than some other technological innovations. Despite respondents' demonstrated preference for public equities, Flynn noted that accessing more opportunities requires investing in private markets. There are some 800 unicorns right now. If you assume historical IPO exit rate per year, it would take 12 years to clear the backlog versus 4 years pre-pandemic, she said. Yeah, well, of course, unicorns are $1 billion in market value. So there's 800 private companies involved in AI that have a valuation of $1 billion already. So she's saying if you look at the exit rate of how many companies have an IPO per year, it would take 12 years for all of those companies to make it. Of course, a lot of them may get acquired, some of them may fail, some of them may merge. So not all of them are going to have an IPO. I think her point, though, is that there's a lot of companies with high valuations in the AI space. So we'll continue to follow AI and see how the investment opportunities turn out. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.